Hi, I'm Peter Rose, founder of Longwood Currency Trading. Is learning Forex trading worth it? That's a pretty stupid question. Of course it's worth it. That's why I'm doing the video. I'm not trying to convince you about anything. And most of my subscribers are Forex traders. So to address that question to them is trivial, except for the fact that even as experienced traders, we need to remind ourselves what we're doing and why we're doing it. The first question that you have to ask yourself when you're getting going in Forex or you're thinking about trading currencies, or even after you've started, what are my other options? Why am I trading? You're trading to make money. You're not trading to save the whale or greenhouse gases. You're trying to make money. So let's look at all the ways you can make money. You can get a 4-year college degree and get a job that is a professional-oriented software engineering or a chemical engineer or forestry management, all kinds of business opportunities that are really only available if you have a broad-based college education. So you invest $100,000 in college, or your parents do, or whatever it is. And the hope is that you'll make $40,000 to $70,000 as a starting salary. So even at $40,000, you're going into forestry management or something, and a low-level guy wandering around the woods, you're going to work your way up very quickly, but you start out maybe at $40,000. This is done in 2025, by the way. Everything is relative, I understand that. But in 2025, $40,000 is difficult surviving if you're have a family or you're living in a metropolitan area. It takes more than that. The average salary at this particular time for an adult is, I think it's about $63,000 a year. So $40,000 coming out of college with a forestry degree or basic business background. So maybe you're an assistant buyer at some large store for clothing or something like that. 40, 50,000, that's about where you're going to land. I mean, you could sit at the in the window at one of the fast food places and make $15 an hour, $30,000 a year if you can work 40 hours a week, which probably won't let you do that. So a $15 an hour job is $30,000 a year, basically a little more than $30,000. So what are you doing that you're looking at investment vehicles? Obviously, you have a job or you're qualified to do some kind of a job, so you're going to be making money. So what's the problem? Well, unless you're an investment banker, you're making enough money to survive. You have a spouse or a partner and they're adding their income to it. Now you can maybe buy a house or buy a condo, but then now you're looking at $800 a month in real estate taxes and $600 a month in condo fees. And if you have a mortgage, you add another $2,000 on top of that. And then you've got your average car payment of $500 or $600 a month, and you have 2 of those. So I'm adding the numbers up, and unless you're at $80,000 or $90,000, you're just kind of bobbing in the water with your head above the cresting wavelets. So we look to do things with our time to pick up a side hustle, or we do look for things to do with our money so that the money makes money. If you're educated financially at all, you know that in the early years of your development, 20 to 33, 5, something like that, you are living on peanuts and saving the stake in an investment account and doing, well, like what I did when I was coming up at 23. I woke up and said, wow, I'm going to need more money than this job that I'm probably qualified for. And I started buying real estate. But in order to buy the real estate, I had to work very hard, and I had to save every penny that I had and live in a second floor studio apartment. And before that, a broken down single wide mobile home with collapsed air for heating, collapsed heating vents. And I lived that way until I had already bought 2 pieces of real estate. And then I bought a house for myself. And a decent car that wasn't going to fall apart. I don't advise real estate now. I spent 40 years as a real estate investor and retired a millionaire because of that. And I even lost $1 million twice in that 40-year period due to economic collapse that affected the real estate market. And I was able to make the $1 million back each time, but it took me 10 years each time. So as I moved into my 70s, and I retired from my job and decided the real estate market had appreciated tremendously, and I don't want to take the risk of a downturn again and another 10-year wait to have that come back. You just don't feel like it. If I was 30 years old, I'd have kept buying real estate, but I wasn't. I was in my late 60s when I retired, and I said, I mean, this is a good time to get off of the bus, and I cashed out. And that allowed me to buy this house, as I said in many videos, for cash without having to sell the place that I lived in before to have the money to buy it. I had the money. So I'm very fortunate. But I'm not lucky. I'm fortunate because I had the sense of an upbringing to value work and money, to have a career, but understand that just because you have a career and you're making money doesn't necessarily mean you should spend all that money to have 2 cars and, all the accoutrements that go with living the good life. 2 ski mobiles and 2-week trips to Disney World and all that other stuff. I didn't do that as I was starting out in my career. But I was looking, where do I put my money? Well, I put my money in me in 2 ways. I started my own business. I was a black belt in karate, 2nd degree black belt. I opened my own karate school, and I got my income from there. And I used that income to leverage that to start buying real estate, which paid me income. And then I got a job, and that paid me income, and I worked hard. But when it came time to sell the real estate, I said, well, what's going to happen? And I didn't start selling it quite right away. In 2007, I discovered the currency market. And I thought, well, is it that interesting? I got my degree in physics and I'm almost a minor in math, so I'm interested in stuff, how stuff works. Well, let's see what this currency trading is all about. So I investigated the currency markets because I had investigated the stock markets. I traded options for 4 years. I've studied commodities and futures. But none of them really appealed to me, mainly because of the experience I had in options, because of the risks that were involved in those things. And I looked at the currency market in 2007, and I did some immediate reading on it, and I go, whoa, wait a minute. I don't know anything more about the currency market except it doesn't have the inherent risks in the stock market. It doesn't have the problems with options. It doesn't have lock limit rules like you find in commodities and futures. And it doesn't have the problems that real estate has. Let me look at this. And so I studied it from an academic standpoint. And not until 2012 did I actually say, oh, I think I'll open a mini account and put a couple of $1,000s in a mini account and see if I could trade this stuff. Well, that failed. I'm not going to go over my whole story here because it's immaterial. Is learning Forex trading worth it? Well, I don't consider that I started learning Forex trading until 2012. And then again, the education that I consumed out there was invalid because in 2017, when I opened my first large live account, I lost those 2 mini accounts that I traded. I thought I needed more education. And so I took courses and all that other stuff. And then in 2017, I thought I had it. I was doing 15% months in the demo account and 8% months. And I was doing great. I got it. Well, it demo. No, there was nobody there to say, don't trade demo, do this. You trade in demo only to learn the trading platform. Nobody was there to tell me that. They all said, trade in demo and you can replicate that in real time. Well, you can't. And it cost me $40,000 of my $45,000 that I put into that live account in 2017. I lost that in about 5 months. And I stepped back from that and I thought, man, this was stupid. I've just wasted from 2007 to 2017, I wasted 10 years of my life doing something that I can't do. It's not worth it. And so I stepped back from what I had done, and I looked at the education. And because I'm an educator, teaching karate at a karate school, I've been involved now, this is 2025, been involved in martial arts for 57 years. So I was teaching back there. I taught lots of people important stuff. And I go, wait a minute. These people that are teaching, quote, teaching education in the Forex market, they don't know what they're doing. They were successful in learning their trading skills, but they don't know what they're doing as far as teaching that. God love them that they can do it, that they can make $8,000 in a sit-down trade. Well, sure, you're trading $600,000 account. It's pretty easy to make $8,000 in a day. There were many days when when I got back into my trading, I was trading a six-figure account. I was making six figures from that, and I could make a couple of $1,000s a day. Of course, when I lost, again, because I was still suffering from that bad education, I would have big losses as well. But the point of the thing is, in looking at working for a living, because I was working as a software engineer, and I love software engineering work, but maybe not so much the people. Because the programmers there, they think they're pretty hot shit because they're really smart and they can remember all the values of the APIs of the little funnel that you use to translate what you're saying into the program that you're trying to correlate through. And they know all this, and they know all this, and they all know all the other stuff. I'm a pretty smart guy. I got a bachelor's in physics. They don't know shit about physics. And I got almost a minor in math. I've done a lot of study. I'm educated. And I was smart. But some of the guys that work in software engineering are not only really, 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 really smart, but they got egos to match. And I don't like that. I don't think that's right. And I came in conflict with those people. And so that's why, even though I had my real estate and I was involved in software engineering, I still got interested in the currency market because I saw what was possible. I saw what these guys had done, what is possible, what they've done. I just didn't see that the way they were trying to tell me how to do it was correct. And so when I lost that money, that's where I stepped back from it. I figured out what the real problem was I was supposed to solve, not the problem they were telling me I was supposed to solve, and certainly not with the tools and the methodologies that they were telling me to use, because I investigated all of those guys' backgrounds, and that's not how they made their money. They don't know how they made their money because they're teaching this stupid shit, Fibonacci's and Bollinger Bands and all the rest of the crap. When you figure out the Forex market, I don't see why you can't make very safely, without pushing the pedal to the metal at all, and just following basic principles, 20% return against your money is not unreasonable. And I can't get into any trouble for saying that because I did real estate investment for 40 years, and I'm compounding at 20 or 25% a month. Maybe not so much on the value of the real estate itself, which is appreciating at on average over 20-year periods of time, probably real estate is going about 8% a year. Some of the areas in the heartland of the country, maybe 5%. I'm on the East Coast, so the appreciation rates are a little bit more here and on the West Coast. But when you have rental property, then you make money from the rentals. So on the amount of money that I put down on the property, my returns were 25, 35%. 20% easily over long periods of time. So, and there's risk in that you don't take when you're investing in the S&P 500 index fund to do an ETF. Maybe you'll get on average 8% a year. Or if you do the stock market, you might get 12% a year. But then again, you can lose 30 or 40% in a heartbeat on that stuff. So with each increasing risk, you go from T-bills that are 4.25% to index funds that are 8%, to the stock market, which is 12%, to real estate, which is your next primary big investment vehicle, 20, 25, maybe 30%, depending on how much your rental roster can increase over the amount of the expenses that you have that adds to the down payment that you put down. The returns are far higher, but the risk is higher. I lost, remember, during my 40-year career in real estate, I lost $1 million twice. And the reason that you lose in real estate is because you can't get out when you know you have to. That's why I got out early. If I wouldn't have started divesting myself of real estate when I did, my thinking was, there's this expansion in real estate going on. This is a great time to get out when everybody's buying. I felt that the crash was coming, and it didn't. But that's okay, because I got out and I retired over $1 million net worth. Now, if I would have waited, I could have made $300,000 or $400,000 more as of today. Maybe I'm out in 2023 totally, and I could have made another $300,000 or $200,000. But if the market would have turned south, I wouldn't have been able to get out. And I'd have lost another $1 million maybe. At 70 years old, do you think that I wanted to even have to take that problem? Well, what if you were just getting involved in real estate now as a 30-year-old? What's the prospect for your success? With the turbulence that's in the market right now and the legal field that awaits you as a landlord or as a developer, do you want to take that risk? So if you go to my website, longwoodcurrencytrading.com, and you go to the currency trading page, there are 7 reasons on that page as to why I prefer the currency market over all of the other financial markets, including real estate, that you could get involved in, what their problems are, and that the currency market doesn't have that problem. So for no other reason other than that analysis is learning Forex trading worth it. And that's why I stayed with it, even though I lost $40,000, because I could see there were people that were making money. Now, it doesn't make any difference whether they know what they're doing or not. They're making the money. They're not talking shit. They're making the money. So if they can do that, and I don't want to risk a lot in that beginning stages because I had already lost 40,000. So I found out what I was doing wrong. I identified the problem I should solve. I broke that into 3 problems, which I now refer to as the life cycle of a currency position. And those 3 problems are each solved by one rule, and each rule is in sequential order to the last one. And each rule consists of 2 to 4 conditions, each condition being in sequential order. It couldn't be any fucking simpler than that. I figured all that out in 15 minutes because I'm trained to do that as a software engineer. I didn't have to sit there and wring my hands and try to find out what was going on. If you don't have my background, it would be very difficult for you to go back and figure out how to put all those pieces together to do that. So that's what I do in my fast track course. Not a pitch for fast track because I can't teach a whole bunch of people. I'm retired. I don't want to use my whole days running a training program. It has great value for you. And all I'm saying is that if you learn the correct steps and you understand trading as a process, as opposed to trading as just a bunch of stuff that you do based on a bunch of stuff that you know, which is all invalid and is not educationally sound at all. If you get the right education, then the least return on your money that you should expect if you're going to be capable of trading currencies is 20%. So that's the goal of my fast track program, is that in a 6-week period of time that you'll have an understanding of the principles involved in trading that $1,000 account that we trade. We only trade $1,000 because I know you're going to lose $200 or $300 of that, putting the pieces together and trying to figure things out. That's okay. You're going to lose anyway when you trade. If you're 60-40 trader, 40 times out of the 100, you're going to lose. Losing is part of risk management. You have to understand it and mitigate the risk. So until you learn how to do that and you're actually faced with that, trading a $1,000 live account, you don't really understand how the pieces that I'm teaching you when we have our conferencing, because it isn't just a book that I'm selling. Fast Track is a manual, but it comes with hours and hours of my time with you through email, through video conferencing, to try to make sure that you understand it. So when you get through with the 6-week period of time, you can say, based on the metrics that you've been able to develop in your trading, that you should be able to make 20% return on your money. And if it all works out right, without any more experience than that, you can look at the math and say, but I should be able to make 40%. I could make 80%, because Peter's made 80% on his return. He's made 60% on his return. Maybe I should be able to do that. And I'm looking at the guys that are taking accounts and making huge amounts of money. Now, most of the folks that you're looking at are trading at 200 to 500 to 1 leverage. I don't. I trade it, 10 to 1. Oh, Peter, how can you make any money doing that? I've made 6 figures trading 10 to 1 leverage, but on a 6-figure account. And I've been safe. But if I was doing over leveraged, maybe I could have made my goal of making $1 million from my 6-figure account. You know, after I lost that $40,000 and figured out what I should have done and what the real problem was, I took my remaining $5,000 and just about doubled that. I came within $200 of doubling that in about 4 months. So, okay, I've got it. I understand what I need to do. I'm not in it for doubling, but I'm just in it for reasonable growth. But that's 100% growth in 4 months. So I should be able to get my calculated 20 to 40%. So I added another 10 grand and traded that for a while. I had another 50 grand and traded that for a while, and I was doing fine. In 2023, when the wheels came off the wagon, in 2022, I made a 40% return going into the fourth quarter against my bank, and I ended up with a 10% return because I was trying to build on this experience, and I was really pushing the lever down in order to make $1 million in 4 years. That was what my goal was. Well, like 2022, I was up, like I said, about 40%, and I pushed it too hard, but I still closed the year 10% up against risk. The next year, I was up, 60% against risk going into the fourth quarter. And again, I stepped on my toe. I got the win wrong, but I still ended up a 31 or 32% against risk. In 2023, I was up 80% against risk going into the fourth quarter on a 6-figure account. I mean, I was making, I made 6 figures on the account. And I had put in a lot of money to the account. And as I said, I went in, I had 80% return against my risk. I could have stopped trading and I could say to you, I made 80% in 2023 against my risk, or 22 or whatever it was. I think I got to back that up. 2022, I was up 80% against my risk and ended up the year at 46%. Again, pushing for that $1 million. But I was still up 46%, so I was feeling pretty good about myself. But I had made 80%. I've gone into other videos as to what I did wrong and all that other kind of stuff. It's due to my real estate background. It's a buy and hold routine, and you can't hold currencies over long terms. You just got to get in and get out and pick away at it. So we go into 2023 again. The second time in a row, I'm up 80% going into the fourth quarter, and I got it. I just let my emotions get away from me. Hope, fear, and greed took over, and I lost 6 figures. And I didn't end up making a 40% return. I didn't make a 10% return. I had an enormous 6-figure loss in 2023 because I did the wrong thing against my rules, pushing for that goal. Let's get this. Instead of 80% return, my numbers say I should be able to get 120%. Let's go for it. I got 3 months to do it. And I just pushed. My greed got a hold of me. And I admit that because I don't have anything to sell you other than my experience. I can tell you what not to do. And as Jesse Livermore said, when you know what not to do, then you know what to do. And when you know what to do, you can make a lot of money. And that's what the Fast Track program is all about. It's building rules that have conditions in them that protect yourself against the things that I have going against me, although it's really hard after 40 years to break 40 years of risk management just because I want to, and I have a rule that says so. I break the fucking rule because I'm sure that the price is going to go there. But when I specifically follow those rules, I can make 8% a month, 4 to 8% a month. Can you do that? Well, I don't know, maybe not. But I would think that you could make 20% a year on your risk out of the gate. And if you follow the rules that we develop, or if you construct the correct rules on your own, there's no reason why you couldn't make 80 to 100% and above on your risk at 10 to 1 leverage, not 200 to 1. If you're trading at 200 to 1 and you make 200% on your money in 6 months, God love you, that's great. But at some point, you will give it all back. They all do. They all do. Except the ones that statistically, if you trade a lot, you'll lose 6 times in a row. But you'll also win 6 times in a row. So if all the forces, if you're an active trader and you're trading at 200 to 500 to 1, you can put all those pieces together and you can get $1 million or $2 million. But then do you continue to trade the 2 million? Not with that risk management, you don't. Not at 200 to 500 to 1, you don't. You drop back and you trade 50 grand. And maybe you double that in 3 months. Maybe you make 50 grand a month. Maybe you can make 50 grand in a flip. But you're not putting your whole account at risk because you're probably going to lose that 50 grand. And you're going to go in with another 50 and you're going to lose that. Then you're going to get greedy and you'll put $600,000 or $800,000 in there and you will lose that at 200 or 500 to 1. So part of risk management is understanding risk management before you say, oh, I don't think Forex is worth my time learning because 90% of the traders lose. Yeah, that's 90% of the traders that lose. What about the 10% who win? Aren't they the ones that are winning all of the losers' money? Because currency trading is one of the few zero-sum games that are out there. If I win, it's because you lose. Not because I win in an analog manner and you lose on an analog manner. You fucking lose. And so that 10% of the people that win all the money that the 90% of the people lost. So is learning Forex trading worth it? You bet your ass it is. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day. If you have any questions about any of this stuff, please send me an email. That's the way I communicate with everybody on serious stuff about what is possible and what you might be able to do if you go and learn this stuff on your own in the right manner, or if you want help from me, we could talk about the Fast Track course.